Good afternoon, everybody. My name is Steve Bogle. I'm the Chief Underwriting Officer for Zurich US for financial lines. Very happy to be a moderator for a very distinguished panel here of key cyber insurance innovators. Just to give you a sense of what we're going to discuss today, we're not going to go through how to underwrite cyber. That's like a 3-day conference instead of 30 minutes. Instead, since these participants have been so key in the cyber insurance space and really helping the cyber insurance market develop from what was less than $1 billion of GWP 4 years ago to over $3 billion in GWP at the end of 2021. Just incredible growth, really helped fueled by InsurTech providers. So we're going to go through their journey, what they solved, how they solved it, and some of the challenges along the way. I'm going to just quick intros. Sean Ram, founding member of Coalition, head of insurance, which translates as all things insurance. To his left is Hilario Trago, president of Box US, Box Insurance US. CJ Przinski, CEO of Resilience, another MGU in the market space, and then Steve Schwartz, VP of Insurance and Underwriting Strategy at Safe Security. Sorry, I got those guys reversed, so I'm following my list instead of looking late in the afternoon. So I'm just going to kick it off. First, going to start with the question, since always love, what is, InsurTech, FinTech, people talk about disruption or help. Sean, I'm going to turn it over to you. When you guys first started on your journey, did you see Coalition as a disruptor, partner, helper to the traditional markets?
Yeah, it's a great question. I'd say a little bit of both, but we absolutely thought of the opportunity for disruption. We believe cyber is the most pervasive risk of society today, and rather than attempt to create a product that was incrementally better than what traditional insurers were providing, we thought there was an opportunity to provide products, services, claims experience, certainly the front-end distribution opportunity that was 10x better. I think there's been a lot of evolution in the market since that time, but our objective absolutely was to take, let's call it a dramatic market share as a result of that goal.
Thank you, Sean. Hilario, you guys are started up maybe a little bit after Coalition, so you're a little bit further along in where the marketplace may be now. What's your view? Disrupt, help, partner?
I'm with Sean. I think it's a bit of both. I think InsurTech in general, it's more of a collaborative environment and ecosystem. Certainly when you compare it to FinTech. I think there's too many actors in the value chain to pretend that you're going to go and disrupt everything in one shot. I think the fact that we can add value in different aspects of that value chain, make it better in some areas and incrementally better in others, it's what really makes a difference. So overall, I think in general having the collaboration, really delivering value for everybody in that value chain is where the value comes from.
Great. Thank you. Going to jump into the real meat of it, and I'm going to have each participant kind of give just a, what problem did you see, and how did you go about trying to solve that problem? Like, obviously, big question. We only have 30 minutes, but I think there's so many different parts of the value chain sitting across this panel here. So maybe I'll reverse it. CJ.
So I think the first thing that we've been able to do is kind of bridge that gap between insurance and tech. For a long time, I think InsurTechs and MGAs had a bad name in the industry about not really taking the best interests of the insureds and potentially their capacity partners as well into their business decisions. So from an underwriting perspective, I think we've been able to help bridge that gap by showing there is a way to marry both, the underwriting acumen and the experience that traditional P&C carriers have used, but also using technology from an underwriting tools perspective, right? And being able to get, a better look at our risks from using both lenses. And you can see that change that's happening because there are a number of traditional P&C carriers that are starting to partner with third-party vendors to give them some additional insight and additional tools for their underwriters to be able to have a better view into what the risk is that they're taking a look at in underwriting. And then I think the other area where we have really been able to help is on the services front. For a long time in insurance, I think there's been 3 phases. The first one was all about, what are you doing when the actual claim happens? Who has the biggest and brightest and baddest fire truck that's going to come and put that fire out? And then, we started to move to pre-breach services. What are you doing to be able to inform your insureds, to help them to understand that there's things they can do to prepare when you actually have an incident? But again, we are living in a very robust and ever-changing threat landscape when it comes to cyber. So the fact that we are now looking at things holistically, that there's this continuous monitoring that's going on of your portfolio, a continuous engagement and constant conversation that's happening with your insureds to say, hey, are you making sure that you are patching your systems in the way that you need to? Did you notice that there was this vulnerability that has just been exploited? Sending out those threat advisories to make sure that they're patching those items when they pop up. That's been a real change from a services perspective that I think that we've been able to accomplish from the InsurTech side.
Great. Thank you. Steve, I'm going to come back to you. I just want to hit the MGUs first. Sean, Coalition, what do you guys look to solve?
Yeah, I think it's helpful to think back around how difficult the insurance industry has made cyber purchasing in the past. We would ask typically a financial or a legal buyer to provide an inordinate amount of details around things that generally they didn't understand. Things like, do you have a firewall? What version is it? Who's your cloud provider? In fact, if you're a small business, you may actually have to hire an MSP to answer those questions because it's all outsourced, right? So you have 5 to 25 page applications, like 2 weeks of underwriting. I mean, this process would take 2 to 3 weeks, oftentimes 4 to 5 weeks to get a quote.
What, purchasing isn't the most important thing in their day?
That's right. That's right. And then the beauty of cyber is there's so much data available publicly that you don't actually have to ask all those questions. So why ask a question if you already know the answer as an insurance entity? Our Coalition's historical tagline was solve cyber risk. I mean, that was the problem we were trying to solve. I think the industry, not the insurance industry, but the broader kind of economy attempted to solve this problem through security. Well, security has its challenges. When security fails, security companies stand by limitations of liability. You may not have purchased the upgraded option, whatever it is, right? Whatever the issue is. Frankly, security had to be right 100% of the time. The adversary only had to be right once. However, security plays a tremendous role in terms of underwriting controls, in terms of even the insights and the data that comes from that marketplace. So this idea of bringing security together with the backstop of insurance was truly the solution to our problem, the solution to this problem of cyber risk. Now, when you can do that at scale, if you can collect data across hundreds of thousands of organizations, when you can leverage that data for underwriting insights, that's where the magic really happens.
Hilario.
I'd just like to add to that I completely agree with what Sean just said, but we think that the service component is where the prevention really sits, right? That's where you have the opportunity to say, what is the service suite of things that you can offer customers so they are ever protected, learned, informed, et cetera, et cetera. So apart from the security services that you can add to that, we believe education is a big part of that. Having LMS systems that you can embed within your customers' intranets, for example, and, get employees and individuals to learn more about the cyber threats and what's going on out there. What should they be on the lookout? What is the latest and greatest things that they be informed about? That to us is a big component of it, which together with the cybersecurity services also then bring not only the automation piece and the data, but also the educational, added value for individuals.
Great. Thank you.
If I can add on top of that, wholeheartedly agree with everybody here. And safe security is not an MGA, right? So our core customers are large enterprises, and we're a cyber risk analytics company, right? So it's partnering with the likes of Resilience, Coalition, Vox, et cetera, and delivering and bringing that trust, as a recognized security brand, right? And doing, with the right incentives to not just collect more data for the sake of more data, but smart data, right? It's very hard to truly understand cyber risk on a purely external periphery basis, in a paper-based application that, says, do you have a firewall? I like to occasionally say, it might as well ask, do you like a firewall? Because it doesn't tell us how well is it, is it implemented on 10 or 90% of your endpoints, and is it configured properly? But it's these relationships, these partnerships that ultimately I think will bring the trust and help bridge that gap between, cybersecurity and cyber insurance, on top of just the gaps internally, with an organization in managing their cyber risk.
One thing that we talked a lot about, like the services, the risk assessment, but one thing that I really think the vendors helped deliver to the marketplace was actually a risk solution to the small business customer. And a lot of that is, Sean, you mentioned it, but the front end of it. And when I look at the growth in policy count, and if I look back, there were insurance agents and even more sophisticated insurance brokers that were, I want to sell this, but I don't have the time. The commission level is pretty low for the level of work. You did talk about the efficiency, but can you guys maybe just hit on how much value just in the execution and the speed of execution that really enabled the uptake in that small business space? Maybe Sean, if you want to talk about what does it take? How quickly can you guys turn around a quote for a customer or a small agent, versus the traditional markets? You mentioned 5 or 6 days of underwriting. What is how much time does it take for a broker to place something for a small insurer on your platform?
Yeah, speed matters. And in fact, speed matters not only for the agent. We actually believe that we can track how the speed that it takes for us to quote and the resulting quote to bind. And I will tell you, the faster we quote, the more quotes we bind on average, right? So our ability to quote, we measure in milliseconds, so we can do this very, very quickly. In fact, the ability to underwrite is far faster than our ability to generate a PDF document, right? With 50 pages of cybersecurity content. So we very much recognize the speed. I think our platform generates something like 10,000 quotations per minute. It's very quick around the world, particularly when it's API driven. So when we establish partnerships with large organizations, the opportunity to quote at scale really, really matters. But I guess to all the conversations that have happened here, or all the comments that have been made, you not only have to be fast at underwriting and issuing quotations, enabling the opportunity to bind. In this world of cyber, you have to be equally fast in your ability to deliver services, to deliver data, to deliver a high quality claim experience. And so what's interesting about cyber is the speed, as I mentioned, that matters. It applies everywhere.
Great. I would just add to that before I pass to CJ. That service speed is fundamental. Because speed is appetite. The faster you quote, the faster you're telling your customer, I care about your business, I want your business, right? So to us, speed is appetite. But equally, when those services need to be delivered, your speed and your ability to deliver solutions is what really matters to the broker and to the end client at the end of the day. So for example, part of our services are the virtual CISO, or what we call our Hackbusters, which is our FNOL line, that really, filters, whether a customer is in real trouble or not so much. And we take them by the hand to make sure that all that really adds value to the conversation way after they've actually gotten a quote within seconds or not, right? So I think the magic of us, cyber, MGAs, insurers, whatever, really happens when both the speed of our appetite to quote and bind a product, it's really delivered once that customer needs services from us. for whether it's claims or any other type of service.
And
Yeah,
CJ,
my comment there is, I know the emphasis was on small business, but it really covers across the whole spectrum. Whether it's a middle market account or a large market client, there are multiple stakeholders throughout the whole entire process, and whether it be the insured and the efficiency that you're able to turn around a quote for them, but also the broker in that process, right? Because, in their role, they're also managing multiple levels of expectation from different carriers and also different people within their organization. So the speed and efficiency that you can have to be able to turn around a quote, to turn around services, to turn around a binder letter, all of those things help to the overall process and the effect and being successful in this marketplace and being able to leverage the technology that you have as an InsurTech.
Yeah, and if I could add, just you look at the information architecture of the companies on the stage today versus your traditional incumbents, right? It's a seamless information architecture from the moment your assessment begins through to the quote issue bind, and it's also informing, right, what services this customer actually needs. Awareness for the broker in that process to help make that sale, and just having done a lot of work with some of the larger incumbents. In terms of, just responding to quotes on a timely basis, to not have to take a, paper-based application, walk across the room, upload it into your rating system, then walk across the room to do a security scorecard analysis and see if you're going to make another decision on underwriting, while that customer has already received a quote from Coalition, Resilience, Box, and, whomever else, and the incumbent is left in the dust in that regard.
And it's not just about, you guys touched on claims, but and we talked about quoting a bit and underwriting, but I can't underemphasize the speed that's necessary in claims handling, and those are services that you guys are providing. So when and I don't know if you want to, if somebody wants just to give a quick example of how speed can help minimize damage. I don't know if one of you guys wants to grab that.
Yeah, even before the actual claim occurs, now again, we have an emphasis on inside out data, right? But if we can identify a misconfigured S3 bucket in someone's, Amazon environment in real time, we have the capability to provide them with those insights to fix that issue, right? And then, how we want to respond from a policy perspective, but leverage those insights to shift towards incentivizing the right behavior, not just penalizing, for that, and ultimately just driving a different relationship, between insured and insurer, and hopefully accelerating what will accelerate the claims response time and just ultimately reduce the expenses if we have those insights.
Perhaps let me provide maybe a counterexample. Envision, one of the most common claim vectors in cyber is fraudulent funds transfer, right? So you get social engineered in your email, you fraudulently or inadvertently send $100,000 to a hacker, not realizing that the bank routing information has been adjusted, has been changed, right? Common problem, happens every day, unfortunately. So think about this in your typical insurance scenario. You pick up the phone, you call the insurance company, and generally you're actually calling a number that is an outsourced party. Well, they're a data clerk. They take the call in, they say, okay, yes, it's a claim, let me transfer you, or let me set you up with a breach coach. Then, a few hours later, you talk to a breach coach. Well, it's important that cyber-related information occur under privilege, attorney-client privilege. So that's helpful. And the breach coach validates, hey, this is actually a claim. We need to make sure the adversary is not in your network. We're going to engage kind of DFIR, incident response-related services. They'll be scheduled to come on your site or help you out the next day. So you have this experience where you call today, you've transferred money away, right? And 24 to 36 hours later, you have someone that shows up and they help get the adversary out. And just to be clear, the claim's paid, no issues. In contrast, however, that same phone call comes to Coalition, and likely any company from an InsurTech perspective, but that phone call comes to Coalition, and within 5 minutes, we've already deployed incident response services. And as a result, to put this in perspective, last year, about 75% of the funds that were fraudulently transferred away from our policyholders, we actually recovered. We retracted the monies. And so in this case, speed actually enables loss ratio improvement. It reduces the severity of losses.
Thank you. No, I really appreciate the commentary from everybody. Since this is a conference of innovation and there's a lot of entrepreneurs in the room, I did want to get a little bit of feedback from the group as you guys were going about solving problems, coming up with solutions for the marketplace. Like, what are some unexpected issues that kind of popped up along the way? What are some things that those early in the journey should be look out for? CJ, why don't we kick it off with you?
Yeah, I think one of the interesting things that we're always trying to deal with is the fear, uncertainty, and doubt that's in the marketplace. Killing that FUD that's out there about cyber insurance and what it is that we're doing as InsurTechs and MGAs. And the key to being able to do that is education. Being able to educate insureds that while it is difficult to harden your network in some instances, that there are things that you're able to do out there to better prepare yourself for those ransomware attacks that happen in the other incidents. Just making sure that we're able to educate appropriately about the different processes that we're doing as an InsurTech and as resilience, and the way that we can help improve our insureds in that nature.
Yeah, and building off that, I would say, especially in the current market dynamic, where rates have increased significantly at the cost of reduced cover, having that trust and transparency with the end customer, so that there's the right relationship to incentivize the right behavior and drive the utilization of value-added services, which I think is an area where the traditional incumbents have struggled a bit, largely due to the fact that brokers are their distribution channel in that regard. If we get to a scenario where we do have a deeper relationship, incentivizing the right behavior, and again, bridging that gap between cyber insurance and cyber security, we can start to actually be a transparent market, right? To communicate to our customers and know that they're not going to get hit with 150% increase at renewal, next year, or there's not even going to be able to get cover because they've had a breach in the last 3 years, yet they've responded, remediated to it, and are actually a very secure risk right now, right? So it's, I think we need to think differently. When you change the way you look at things, the things you look at change, right? And how we can look at the market a bit differently, even from a risk selection perspective. It doesn't need to be all driven by industry revenue, right? And just different new perspectives as to how we can evaluate a given risk.
Let me just add one thing there, because we've spoken about, the quote and bind, we've spoken about the claim servicing and all that. And I think I'm a big believer, and we at Box are, huge fans of the fact that the customer, it's worth keeping them informed as to what's happening in their neighborhood or in their industry or in their area with regards to threats. And so, we don't really have to wait until there is an incident or they call us for, some issue or some claim, for us to keep a constant communication going with them to let them know, listen, this stuff is happening and you should be aware. This is going on in hacker chatters around your industry or around, your vertical. And I think that is something that we can get better at. It's both a challenge and an opportunity for us as InsurTechs to become a more of an information delivery or type of organizations that keep that thread and that information level and the level of anxiety of our customers and based on that information high, so everybody's on their toes, making sure that nobody gets complacent about it and think it's all solved, because cyber is the most dynamic risk that we've ever faced, and it's only going to get worse over time.
There's a couple hypotheses that we had as a company when we started that were very surprising to us about how they played out. The first one was mind you, we started our company in 2017. I think from an insurance perspective, the oldest company other than Zurich, of course.
We're very old.
So in 2017, we had this hypothesis that, hey, security matters in cyber. Well, that sounds really odd to say it today, because we all know that's true. But when we would discuss kind of security with brokers and policyholders, that was a challenge in 2017. Extremely soft cyber insurance marketplace. Like there was not a lot of effort being put into security from an underwriting perspective. And when the marketplace for certain risks was at minimum premiums, we would decline it, because we thought there were dramatic security risks. Well, that was one that was surprising. We thought that would be adopted far faster than it has been, and that was a struggle for us. The second hypothesis was we believe that SMEs valued services in cyber, which was not prominent at the time. So we believe that an SME would take our services, utilize them, and that it would make not only the insurance product more sticky, but it would provide so much more value in terms of mitigating, preventing claims, et cetera. I want to say surprisingly, because our user adoption rates have been phenomenal, like just amazing across those services in that SME space. So a couple surprises for us.
That's great. I gave the panel the opportunity to kind of make fun of old traditional carriers, and many of them partner. They didn't take advantage of it, but this is the last opportunity to take a shot. So but anything maybe for those that do work, Steve, whether it's working with partners, in your role, insurance partners, like what are some challenges that you see there?
Yeah, so just even coming back to the first question on disrupt or not, agree with everyone. I think it's a combination of what aspect of the value chain you're disrupting, but a degree of minimum viable disruption, right, in terms of engaging with the capacity partners and insurers. From our perspective, right, we have an emphasis on collecting data on an inside-out basis, which everyone on the stage will attest to the fact that has been a struggle, in the cyber insurance industry for many years. Now, we believe that it's taken customers to feel the pain of the last, renewal cycle or two to be at a point where they are willing to share more data, via API, et cetera. But candidly, right, we are still facing those conversations with underwriters, with brokers who see where the world is headed and believe in it, but are we ready today, right? And it's, for us, it's really finding those right partners to collaborate with, and quite honestly, we see a lot of opportunities coming through because of how hard and tight the market is and how many companies are unable to renew cyber insurance because they're a payment processor or they have had a breach in the last 3 years.
I'm just going to grab a couple of questions here and there. We're running a little bit short on time here. I'm going to avoid the really technical questions because, that could kind of go on for a bit. But you talked about services. What else, Hilario? What else? The one question is getting SMEs to really want the coverage, know that they need the coverage. Is it a training issue? We talked about once you get them on the platform, they tend to appreciate and get sticky. But how do we, as an industry, kind of push the need?
So I think I'm gonna piggyback on what Sean said earlier about the hypothesis that they had originally in 2017. One of our hypotheses at Box is that education is a prime component of getting SME adoption into the cyber coverages and cyber services, and that's why we put a lot of effort into making sure that all employees within an SME, understand what are the risks that they're really facing. And some of them are very basic. Some of them are not about, you should install this latest and greatest cybersecurity, monitoring tool, although that helps. But it's more so about making sure that everybody understands how can they be victims of that, how can they expose their business, and therefore, keeping that education component, up there as part of the key components of the services that we provide.
Great, thank you. Hey, one question came in about, and you mentioned it, dynamic environment. How do we know we're getting it right, loss ratio standpoint? It's shifting threat vectors, severity, frequency. CJ, you want to grab that?
I'm sorry, can you be clear with how that question?
How do we make sure that we're keeping the loss ratio, sustainable for the industry?
Don't pay claims. That's the easiest way to do it. Keep increasing price, higher retentions, lower coverage. Don't pay claims. No, I think it's you're going to hear me continue to go back to education, right? And speaking to our insureds and getting them to understand that simple improvements that they can make in their security posture. And understanding what the process looks like when an event does happen, being engaged with us, as an insurance provider and understanding who it is that they need to contact over here. Sean made a good comment about when, you make a call to Coalition, they're quickly turning around and putting their forensic team there with you, right? They understand that they need to call Coalition. The same thing is happening when they're working with resilience. We have an onboarding call with all of our insureds where they get to meet, the key stakeholders within our organization, and they understand who it is that they need to contact and what that process looks like. So, having them better prepared and educated around how they need to react and what they need to do within the organization, whether it be, readjusting what their future timeline looks like for upcoming improvements they want to make in their security posture, and helping them realize which ones are more important than others, is all going to lead to lower loss ratios, more coverage, better pricing. All those things happen over time.
How do we incentivize insureds to take the right steps, right? Become a better security risk with benefits on the policy side from coverage, premium, et cetera. And I'm not going to go deep into the tech and to support that, but just at a high level, right? That's through awareness, through education, through the right degree of services that are prioritized, relative to that customer specific risk, not just like a Google sheet of different vendors they can talk to, right? And where taking certain actions and steps yields a return, in terms of whether it's premium, it's something at renewal, enhanced cover, whatever it may be. But again, just tightening that relationship, between the insurance policy and cybersecurity.
I'm going to take the last minute here to try and race through. I want the group to potentially, I'll start down here, and Sean, I'll end with you, but what do you see next? Since cyber insurance providers, InsurTech has solved a lot in cyber and helped grow it. What's next in cyber insurance? I'll go with you three on that, and then Sean, I'm going to go, what's next beyond cyber?
I still think we have a lot in front of us right now, especially when you see all the geopolitical tensions that are going on, and there's conversations with our reinsurers and our capacity providers about what it is that we're doing to protect our portfolio, language changes that we're making to the war exclusion. I mean, as boring as an InsurTech that some of these things sound, they are fundamental to what we're doing in our business. If we don't have those strong relationships on the capacity side, we aren't going to be able to bring these successful solutions to the marketplace. So there's still a lot in front of us that we need to conquer, in the cyber insurance market.
Yeah, and to CJ's point, from our perspective is how can we help the industry, the end customers in the ecosystem better quantify their risk, right? So they understand what their exposure is at an individual basis, but certainly at a portfolio basis, right? And moreover, again, just tying the right incentive structure, between security and insurance, with where the industry is headed, I question, a few years from now. Right now, it's the all-encompassing cyber insurance policy that covers all of cyber on page 1 and starts to strip cover away on the next 40 pages. 5 years from now, is cyber a bit unbundled, right? As we continue to shift into this digital intangible world, right, where there's going to be a lot more cyber risks than ransomware or social engineering, and even with that, right, having the right tools and solutions in place to keep up with that changing threat environment, right? I'd venture to say that the ransomware of last year is likely going to be the social engineering of this year. And time will tell and see.
Larry?
Yeah, I think we have a massive challenge in front of ourselves, which is because cyber is so dynamic, we need to keep up with it. And in order to keep up with that, as much as there's fintechs out there that are focused on financial inclusion, I think we're going to have to drive ourselves into a protection inclusion, because cyber is a risk that hits the richest of the rich and the poorest of the poor, the biggest of the companies and the smallest of the SMEs. And so if we figure it out to have dynamic coverages that actually fit what all of those customers need to make sure that they're protected from the get-go, starting with embedded insurance all the way to things that they can pick and choose, including services, I think we're going to do the job that the market deserves. And that's a fundamental opportunity for us to grow exponentially, as Sean was saying earlier. Otherwise, I think we're not going to really address the challenge of what that risk really entails.
Sean, you want to close it out? Beyond cyber, where does the cyber insurer go from there? Where's the next disruption, for you guys?
Yeah, so Coalition, we announced that we are providing executive risk policies, so D&O EPL, crime fiduciary. We also purchased an entity, a PNC, a BOP entity, with about 70,000 policyholders there. And so cyber will always be coalition's North Star. Like that is, again, the most pervasive risk of society. Your average SMB, they want this purchase to be simple. They want it to be straightforward. They don't want the complexity of determining whether or not social engineering should be covered on a crime policy or on a cyber policy. They want to leverage their purchase to get better economics. And so we think there's a significant opportunity for disruption in those adjacency spaces as well.
Great. With that, thank you to the panel, and thank you for helping us traditional old markets find solutions for a dynamic risk and bringing it to the small business and middle market space.
Thanks, guys.